The adage that data is the new oil is frequently tossed around in the discourse surrounding financial markets, and for good reason. After all, having the ability to develop niche products, identify potential customers, and essentially predict the future are incredible assets to any company or venture. But as the market for data grows, so too does competition between data providers. It's perhaps for this reason that the data science and analytics space has grown and evolved so much over the last decade. Analytics firms are constantly searching for new ways to process the world and create narratives that can help us to understand it better. And in a society that's increasingly online, they are uniquely positioned to have access to practically infinite amounts of information. This is particularly true within the world of finance. With the amount of information that's available, there is also an opportunity to examine more deeply how things that may not be typically associated with financial markets can have a powerful impact on the ways that these markets move. Recently, finance magnates spoke with Selbert, CEO and co-founder of data analytics firm Indexica, about how artificial intelligence is empowering the financial and cryptocurrency industries with new kinds of alternative data, as well as how his own firm is analyzing the way that people talk about assets in order to predict how they will move in the future. So Zach, can you tell us, me and our listeners, a little bit about who you are and the work that you do?
Sure. So I'm one of the three co-founders of Indexica. Indexica had been in development for over 5 years before we launched it in January of this year. Mm-hmm. And my background is in finance in various forms, whether investment banking or asset management. The other co-founders here have completely different skill sets, ranging from econometrics and statistics to natural language processing and other types of database skills that are needed in order to make Indexica happen. But as one of the co-founders and the CEO of Indexica, I try to lead us in the right direction, align us with clients that believe in the type of data that we produce and can benefit from it in their investment strategies.
Right. So you got, three people coming from different backgrounds to form this data, and Indexica is doing some really interesting things. So can you just give us kind of a TLDR of what the kinds of things that Indexica is producing and doing in the space?
Sure. So the premise of Indexica is that what's going on in the world around us and the opinions about what's going on in the world around us, most importantly, impact markets in a lot of different ways, whether it's rain in Brazil impacting the price of coffee or the opinion of Jeff Bezos impacting Amazon's stock price. So if you multiply that by everything that's happening in the world and everything that trades in the world, starts to become this unlimited amount of data to crunch. And so our sort of methodology for making this practical is to say that the news is generally narrating what's happening in the world around us. It's narrating events really, really well, especially if you crawl news from every country in the world, which we do. And it's also good at picking up on sort of emotions or opinions about what's happening around the world. And not just sentiment, but anger, fear, uncertainty, probability, opportunity, all these different ways that you can quantify various feelings. So we crawl the news and we quantify into this portfolio of metrics. So the first step is to say the news is narrating what's happening in the world. How can we take the news and convert it into something quantitative so that we can then model it up against the markets? So first we convert everything that we read into these 40 metrics. And then we start to either look at the relationships between these metrics and markets ourselves using a product that we call Predictive Indexing, or our clients do it using models that are somewhat blind to us. So they digest our raw metrics that are usually mapped up to a security universe that they choose, and they prod it and hope to find predictive relationships in the data set, which they are finding because we're getting traction from clients for our products.
Right. So can you give us some specifics about some of these 40 metrics? In particular, a couple earlier this year, Indexica was featured by Bloomberg, and that article specifically mentioned both futurity and quotability. So can you explain a little bit specifically about what those two metrics are?
Sure. Futurity is definitely one of our strongest metrics. It is completely proprietary to Indexica, so you won't find it anywhere else. What it does is it reads language and it analyzes whether or not the tense is in the future or in the past. So it parses verbs for whether they're in the future or in the past, but it also extracts times and dates. So if I was mentioned in a news article and I said that Amazon was going to be releasing a fleet of drones next year, we would sort of quantify a bunch of different entities as being future, so next year. Whereas if we read an article that said Boeing grounded its fleet of 737s, we would ground that as last year. So imagine multiplying that type of verbiage by millions of sentences from all the text that we read and mapping that to publicly traded securities. So that's what this metric does. And interestingly, if you look at it and you look at market performance, there tends to be a very strong relationship between how often or to what extent a company is spoken about in the future and then the performance of their stock. So the more in the future a company is mentioned, the better it tends to do. We think that that's probably because if you're mentioned in the future, it's because you're innovating, you're attracting investment, you're releasing new products, good things are happening. Whereas if you're mentioned generally in the past, although it could be that something good happened in the past, the news cycle tends to be that it is referencing something bad that has happened. So companies should aim to be spoken about in the future. The future has to be better than the past for markets to do well.
Okay, basically, so if I had a company and it was being reported as company XYZ is going to launch this fantastic product in fourth quarter of this year, just the fact that that sentence was there, and even if it was something like company XYZ had a great profit in 2013, the presence of more future tense phrases in the news cycles around the world would indicate that my business was possibly going to do better, basically.
Yeah, I think any one-off could disprove that theory, either one company with a out of whack score or one sentence. But across millions and millions of sentences and thousands of companies across many years of data, this holds true and proves out. And if you create a trading strategy on it, you will outperform most market indices. And you mentioned another one of our metrics called quotability.
Yes.
This is an interesting metric that looks at how often certain entities are mentioned in quotes, so spoken by someone inside of an article. So if an article said that President Obama said that Amazon was going to do X, I know that's a terrible example, but it's spoken by someone besides the author of the article.
Right.
And we find that to be a very valuable metric because one of the more typical NLP, natural language processing based metrics, is just counting words. And the news tends to multiply itself. So if there's a story about something, you'll find tens of thousands of articles that are talking about the same thing. And while that is in and of itself often a very valuable thing to understand, quotability can act to reduce that sort of mountain of news that can collect on stories that don't necessarily matter. So if we're measuring quotability side by side with volume or count, which are two of our other somewhat similar metrics, measured against various entities, there's often a lot of very interesting things that can be extracted from that. And then Indexica can get really fancy, and it can do things like it can analyze the futurity of quotes spoken by a certain person from a certain country, from a certain media source. So it can get extremely granular if our clients want it to. And when we're looking at unstructured data, being able to do that kind of thing is often the only way to get proper value out of it. So that explains only 2 of our 40 metrics, but all of them are really there to measure what a human would measure when a human reads. So whether it's something as simple as positive or negative, which is well known as sentiment analysis, or something like anger, desire, fear, probability. We have a metric called gender, which looks at whether text is generally more male or more female oriented. And we created it by reading millions of quotes said by men or women, and then categorizing words as being those that are more often spoken by men or women. Interestingly, with this metric, what we have found is that if you create a gender score mapped up to companies, the score ends up aligning almost perfectly with any traditional ESG score that you would find from any of the major ESG providers. So that's a side note, but the takeaway is that each one of these metrics is measuring something particularly important. And of the 40 that we have, I think at least 35 of them you'll only see at Indexica.
Right. So is this, is Indexica working only in financial markets, with the creation of these kinds of metrics? I can imagine that they could be used across a wide, variety of things, but where is the work that Indexica is doing at this moment in time? And perhaps what are the plans for the future?
So far, we're focused on asset management and various offshoots, versions of it. So we're not in the marketing industry or any of the other areas where it could potentially make sense for us to be. We're not there yet. So far, we're going to finance and specifically asset management. Even more specifically, quantitative managers tend to be our largest customer base. We are trying to get into the index business, essentially using our quant factors as inputs to create selection criteria for stocks that would eventually go into an index, which would eventually be an ETF. It seems that the market's going in that direction, but we might be a little bit early there. But also discretionary asset managers, anyone who's involved in some way or another in the research or investment management business is trying to find ways to digest Indexica's data and alternative data from lots of other providers as well.
Right. So I want to maybe start to touch a little bit on how these metrics can be used specifically in, with the security. And when we talked before we went on the air about this study that got a lot of press that Indexica did about Bitcoin. And it seems like there were a few actually that got publicized over the last year since Indexica came into existence. So can you talk a little bit about how Indexica's metrics were used in that particular case?
Sure. So Indexica really has two main products, and one of them is called Predictive Indexing. And the way it works, think back to the 5 minutes ago when I was talking about how we crawl the news. So imagine that we are crawling news from everywhere in the world on a 10-minute cycle. It ends up being millions of stories. And these millions of stories are in a constant state of ingestion. So then imagine we had the price of Bitcoin over the last 3 months and we had all this text and we sort of lined those two things up. Predictive indexing tries to find the patterns in that sea of news text that has a relationship to the price movements of Bitcoin, not only statistically, which is actually easy to find, but also logically, which means that we eliminate any kind of relationship that is spurious and does not pass through sort of the logic test, the economic rationale test. Technically speaking, what that means is that it doesn't pass through three knowledge graphs here. So if the volume of rain in Brazil is predictive of the price of coffee, that would make sense logically. If the volume of rain in Brazil is predictive of some stock in London, it wouldn't pass through. So with the Bitcoin test, we applied this product, predictive indexing, to Bitcoin, and we have done it multiple times throughout the year, each with different results depending on the time period. And what it essentially found earlier in the year was that the futurity of Bitcoin had predictive power to the price of Bitcoin, which led us to think that Bitcoin was suddenly moving like a stock would to some extent, because futurity tends to have a lot of predictive power when we're talking about equities, but we had never seen that before with Bitcoin. So that was a real revelation. And we've been continuing to follow what is moving Bitcoin. And lately, it hasn't necessarily been the futurity of Bitcoin, but it has been other metrics applied to other entities like quotability for currency, sentiment for MasterCard, futurity for gold, action share for Ripple, volume for ETF, and buzz sentiment for blockchain, which really implies, if you just look at the entities, that Bitcoin is part of a much larger ecosystem. And what moves it could be anything that happens in that ecosystem. So rather than just making a blanket statement like this, predictive indexing was able to nail down exactly which entities one needs to pay attention to and exactly which metrics should be used to measure what's going on with those entities. And during a certain time period, especially in an in-sample environment, this had predictive power. And then if you let it rip in an out-of-sample environment, it did really well also. It was accurate about 2/3 of the time. So this is a way to create a narrative out of a lot of quantitative data around Bitcoin. So this is kind of the human element to the machine learning and artificial intelligence process that predictive indexing employs.
Yeah. So I just want to ask, from a human interest perspective, like, how did you guys like, was it an educational background? Was it, something where three people, the three co-founders of Indexica met and, just started talking about the ways that different kinds of data measurements could intersect, but basically what was sort of the inspiration to create this firm?
It's a good question, and Indexica has evolved so much from when the idea first came to what it is now. And at each one of those evolutions, I'm sure that my chief technology officer can grumble and complain about the changes that had to happen in order for that to occur. And I think he would be particularly frustrated with me for that. So I'll take the blame now. But initially, I got really excited about how natural language processing could make sense of way more than a human could, because it could read many millions of news articles in a day, which a human cannot. So my initial thought was sort of, this is an eyes in the sky concept. If I'm an investor, but I'm missing 99% of what's going on around in the world, how can I claim to make, good, practical investment decisions? I need help. I need computerized help. I need artificial intelligence to do that for me. So the idea was, how can we read the news and make it useful if you're an investor? And so we thought, here are at that time, there are really only a couple metrics when we first started that other people had thought of that could be used to quantify news. And that was really sentiment analysis and word counting. And we recognized that was particularly inadequate. So we set out to build a system that could quantify what it read in a lot of different ways, sort of, what was possible with NLP, how far could we push the edge? And then the reason our company is called Indexica is that we allow users, or we can do it ourselves, to fuse these metrics together. So just like the S&P 500 has 500 constituents, any Indexica factor can be a constituent of various metrics. So we use index mathematics to say, here are the 40 we have off the shelf, but you can sort of multiply these in any way you want. That was the initial plan. And then we realized that predictive indexing, the product that I just explained to you, would be extremely powerful because it would be an intelligence engine rather than just a data engine. So the first product, where we're just monitoring what's happening in the world, converting into quantitative metrics, is really sort of an eye in the sky product to say, here's what you're missing as a human. But the next product goes even further and it says, hey, instead of you human being able to, or being unable to digest that huge quantity of data that Indexica can deliver to you, here's an intelligence engine. Here's some computerized brain power to make sense of it so that you don't need to pay attention to 99% of what Indexica is finding. You really should just be focusing on these signals, which have been found to be powerful on exactly the markets that you're trading, whether that is Bitcoin, any other crypto, some economic indicator, a stock, a bond, currency, or commodity.
Mm-hmm. Right. And so, when it comes to some of these metrics that are, you mentioned earlier, gender as a metric. I mean, I'm curious what kinds of links that you've seen with something like that. For example, if something is, reads more masculine, for example, what kind of an effect does that have on an asset, on a security? Also something like this other metric, complexity, that one is maybe a little bit more clear. And Bloomberg described it as a measure of the quality of discourse around a certain security or asset. I'm just curious, I guess, in isolation, do any of these metrics, tell a story, particularly these metrics that are a little bit, um, how should I say this? Like, it's not necessarily clear what the connection between the value of an asset is and, certain metrics versus, other ones. For example, sentiment of fraud, it's easier for me, at least, to make the link between thinking, oh, okay, there's a lot of sentiment of fraud around this one asset, therefore it's probably going to go down. But what kinds of links have you discovered?
So for the gender metric,
Mm-hmm.
and I think that most people who are big into ESG investing can tell you the same, which is that so far, most companies that would score highly, meaning very positive on E, S, or G factors, haven't really yet shown that they outperform those that are low on those kinds of scores. Mm-hmm. I think that some analysis have shown that they have, and of course the hope is that in the future, those companies that score highly on those three factors will outperform. But with our gender factor, it's been fascinating because male dominant language clearly is connected to companies with low ESG scores, mm-hmm. and more female dominant language is clearly connected to companies with high ESG scores. So if you are looking to replace a team of 300 analysts that are digging through company performance and company activity to understand how well they're performing, let's just say on the environmental front, mm-hmm. you can instead just look at how people talk about these companies. And if it's macho, it's not going to be good. And if it isn't macho, they're probably doing more of the right thing from an environmental standpoint or social or governance standpoint. So this is a really fascinating one for us because up until now, it still hasn't really meant anything in the how well the stock price does, but there's so much interest in ESG for all of the right reasons. And being able to measure this is really important. And in my opinion, the problem we have with ESG at the moment is that it is subjective to humans deciding what is, in some cases, morally acceptable. Mm-hmm. So back when we had slavery, companies that employed slave labor did really well. And if you had a ESG ranking firm at that time, what would they have done about that type of behavior? Mm-hmm. And to this day, we have animal agriculture being one of the most destructive environmental forces that exist. And I would argue also particularly immoral behavior, mm-hmm. Animal agriculture. But, you might find that a company that sells steak or chicken could have a very high ESG score because it's subjective to the human decision. So I think that the human factor in ESG scores is flawed. If you look at something purely like language, like our gender score would, whether it was slavery back then or meat production now, it gets it right. So in some ways, using an artificially intelligent system to do this is better. And it's also more real time. If mm-hmm. CVS stops selling cigarettes tomorrow, we're going to pick up on it that minute. Whereas a team of 300 analysts might take 3 months before that's implied into one of their scores. But anyway, that's a story of how one of our metrics is really interesting, but not necessarily extremely powerful to those that are using them just to understand how they relate to market behavior. I think I mentioned that futurity has a very high correlation to outperformance. We have a metric called surprise, which is highly correlated to negative performance.
Okay.
So imagine that all of a sudden Netflix reported earnings, and in that report was something about subscriber growth being less than anticipated. We would consider that in Indexica to be a surprise, and our surprise metric would be able to pick up on that. And if we measure that type of metric across thousands of securities, we have found that it's a good predictive indicator of how a stock will perform over the next quarter. So if you pick stocks that are high on surprise and you pick them as long trades, you will do worse than an index. If you pick them and you short them, you'll do better. Or if you just look at this metric and avoid those from some other portfolio that you have, you will do better. So some of our metrics, like futurity, complexity, and novelty, we have found have systematic power to result in outperformance, and some have systematic underperformance power. Surprise and anger are two strong ones. And there's lots of different ways to look at this: long-term, short-term, different rebalancing strategies, different look-back periods. So depending on what you are as an asset manager, you'll take this data and use it in a different way.
Right.
But hopefully that answers whatever the initial question was.
Yeah, it definitely. And so is anybody else really doing what Indexica is doing? I know that's sort of maybe a loaded question, because you have to put Indexica at the front of your conversation, absolutely. But it really seems like there's so much. Personally, I'm like totally blown away by this work. But is this
Thank you.
greater trend? Well, you're welcome. But is this part of a trend in data when it comes to finance, or is this something that's sort of new?
We definitely have competitors. We are not the only company in the world who is thinking like this and trying to do things like this. Yeah. Well, what I have found is that we have a lot of competitors in certain parts of what we do, but not too many who have brought it all together. So if you are out in the market looking for someone who can do a good job with sentiment analysis, or even a couple of other factors, then we have a ton of competition, and we aren't going to be at the top of the stack. If you're looking at a company who can sort of provide this entire portfolio of metrics that are all so different, I haven't really seen that. And usually there's a Chinese wall between companies that are providing raw data, like our factors, and those that then do something with that data, which is what our predictive indexing product is. So really the intelligence engine with the data. So we haven't seen a company that sort of does all of those things together. And of course, there are companies that are often trying to make sense of data that they don't get themselves. So the intelligence engines that work kind of like predictive indexing, that does exist in the market. Oftentimes that exists one by one at various hedge funds themselves, who are trying to build a system to ingest data from hundreds of different sources and figure out how it can apply to markets. So it's not always a product that is being licensed to various companies, but it's actually being built by what are currently our clients.
I see. And how, I'm curious also if you've noticed that this, if this is a trend, this kind of data analysis in finance, have you seen, changes in the behavior of companies, the way that they're trying to market themselves, the way that, the way that the decisions that they make as a result of this kind of data in particular yet? Or do you think that's something that's going to come in the future, perhaps?
It's definitely happening.
Okay. Can you give
we don't only compete with companies that are measuring futurity or sentiment. We compete with companies that have satellites in the sky and are looking at parking lots in China. And all of us in the alternative data industry are trying to measure something that has historically been impossible to measure or hard to measure. And then saying this has some sort of investable insight in it, and then finding a market for that. And I think that hedge funds across the board. Anyone in the active asset management space is looking at this data, they're ingesting it, they're spending more money looking at it and more money buying it.
Yeah.
Of course, the index business, the passive business, isn't yet doing that, and that's where the money is flowing to more than active. So I think really the active space has a real advantage over passive in that it can look at this data and invest on it. And my hope is that the passive index space gets there too, but at the moment it's not there. But broadly speaking, someone can give you better stats than I can about how fast these markets are growing. But, it's something like hedge funds are increasing their alt data spend by 40% a year. They're increasing their quantitative research teams by 20% a year. 70% expect to spend more money next year than last year. So every stat that you would look at like that would show a market that's in growth.
I see. What's on the roadmap for Indexica over the next year?
It's not that I haven't considered that. It's just that it seems whenever I come up with a roadmap, it changes. But I think that this year we have really figured out how people want to digest our data. And my hope is that over the next year, we continue to grow the base of customers who digest it and use it.
Okay.
So nothing momentous except for growth, I hope, over the next year.
Well, Zach, I hope so too. Thank you so much for your time. This has been such a fascinating conversation.
Thanks for your interest.